Good evening. This is the Post-Market Recap by AGI Era. Today is Monday, January 5th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session, the scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a nuanced battle, with major indices closing higher, but underlying concerns lingering. The S&P 500 finished the day up 0.64%, settling at 6902.05. Technically, the index managed to push higher, holding above the psychological 6900 level, a positive sign for bulls looking for continued momentum into the new year. The Nasdaq 100 also moved higher, closing 0.77% higher at 25,401.32, indicating that growth-oriented tech names found some footing. The Dow Jones Industrial Average finished up by 594.79 points, closing at 488,977.18. Crucially, trading volume today was lighter than average, which implies that while the indices saw gains, this move might lack the strong conviction typically associated with heavy institutional buying. This lighter volume suggests a cautious approach from larger players, potentially waiting for clearer signals. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, data was not available today. However, the overall market action suggests a controlled environment rather than widespread panic despite some sector rotations. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology, which closed up 0.22%, while utilities XLU lagged significantly, finishing down 1.11%. This rotation indicates that Wall Street is positioning for a growth-oriented environment, favoring sectors with higher earnings potential over defensive plays, even as broader economic data presents a mixed picture. The primary driver of today's moves, and a significant point of concern, can be traced back to the economic data released. The 10-year Treasury Yield data was not available from our Stook feed today. However, any significant movement in yields would have profound consequences. A rising yield environment, for instance, typically creates a headwind for growth stocks and mortgage-sensitive sectors like home builders, as borrowing costs increase and future earnings are discounted more heavily. Conversely, falling yields can provide a tailwind for these same sectors. Meanwhile, the U.S. dollar index is down, settling at 98. This slight weakening of the dollar could offer some relief to multinational corporations, making their exports more competitive. Crude oil is trading around 58.34 UP on the day, despite earlier news narratives suggesting that Venezuela's Maduro capture might hit oil prices. This indicates that other supply-demand dynamics or geopolitical factors are currently outweighing that specific headline. A key piece of economic news today was the ISM Manufacturing PMI, which dipped lower than expected, indicating that the U.S. factory sector contracted for the 10th straight month in December. This persistent contraction signals caution for the USD and suggests a continued slowdown in industrial activity, which could impact corporate earnings and future economic growth. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech, NVIDIA finished down 0.39% at 188.112. The weakness in NVIDIA is notable and can be attributed to growing fears of an AI bubble, concerns about hyperscalers slowing AI spending, increased competition from companies like Amazon and Google developing their own custom chips, and stricter U.S. export controls on China. Some investors are also reassessing its high valuation despite strong business fundamentals. Microsoft closed essentially flat, while Apple finished down 1.38% at $267.27. Apple's decline is linked to a mix of negative headlines, including weak demand for its Vision Pro, renewed analyst caution regarding its valuation and 2026 upside, and competitive and AI execution concerns. Other notable Magnificent Seven movers include Amazon, which was up 2.89% at $233.37, and Tesla, which surged 3.1% to $451.69. Meta also saw a respectable gain of 1.29% to 658.8, and Alphabet was up 0.49% to 316.69. The divergence within the Mag 7 highlights a selective approach from investors, rewarding companies with clear growth catalysts while punishing those facing headwinds. After hours and look ahead. Looking at the after-hours tape right now, we're seeing some interesting movements. Shares of Baker Hughes Co., BKR, are up over 9%, Phillips 66 is showing a gain of 6%, and Tyler Technologies is up more than 5%. These movements suggest specific company news or sector-specific catalysts are at play, which we will be monitoring closely. As we pivot to tomorrow, the calendar brings us continued focus on global economic indicators. Investors should specifically watch for any further commentary or data related to manufacturing and consumer sentiment, as these will provide crucial insights into the health of the economy and potential shifts in monetary policy expectations. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.